how to pay off your investment mortgage using an investment fund. Property investing exit strategy. Right guys, so today I want to talk about something that I don't feel that's spoken about enough, and that is your exit strategy for your investment properties. So a lot of us, if you are anything like myself, you've got your investment properties, and if you have got them through a mortgage funding, then chances are they're going to be on interest only, which is great because then obviously you're not spending as much each month. In itself, it's great because you're not spending that much, which in itself, guys, that's great because we're actually maximizing our profits because we are spending less on costs. But then because we're doing that, still got that whole mortgage that is still piling up and still going to be there at the end of the term. And if you're anything like me, for example, if you've got children or you want to actually hold on to the property and have that as a way to build wealth and also build generational wealth as well and pass that on to any children or grandchildren, maybe you're going to be wanting to think about adapting your exit strategy and what you're going to be doing when you actually come to the end of that mortgage term. So today I just wanted to have a quick chat about that and just share the strategy that I'm using so that hopefully by the end of the mortgage term, or when I come to retirement, or when I come to that place at the end where I want to pay off the mortgage because I still want to retain the properties, I've actually got my exit strategy in mind, and it's something slightly different. So I really want to share the strategy that I personally will be adopting and using so that my interest only mortgage that won't become a big problem in the future when it comes to the end of the term. So what we're going to be covering in today's video is what I'm doing to put a portion of money aside out of the rental, investing in long-term funds, for example, like Vanguard, and why I'm not solely relying on the investment gains, and hopefully the risks and versus the rewards of me using this approach. And of course, maybe how you can do the same with your properties. So hi guys, my name's Sabrina and I've literally started to invest in properties over the last 3 years, and I'm literally documenting my journey here on YouTube via this channel. So if you like the content so far, please like and subscribe and maybe comment down below. So today I'm just going to be sharing my sort of quick game plan on what I'm doing in regards to my whole investment sort of plan. So the properties are literally a small part of the whole entire investment plan I have in my head, and it's part of, and as I say on this channel over and over, I'm wanting to diversify my portfolio and sort of put my money into not just property investing, also into funds like Vanguard, and hopefully using those to build up some wealth so that I can pay off all of these properties that are on interest only at the minute, pay them off at the end of the mortgage term. So whether you're a seasoned landlord or whether you're just getting started as well, maybe this strategy might help you out as well. So if you're anything like myself, if you are an investor come landlord and you have got your investment properties on interest only, but you might have thought, how am I going to pay this off when it comes to the end of the mortgage term, because you've still had that outstanding? And I know a lot of landlords are probably going to be relying on maybe selling the property at the end and then paying it off that way. But if you're anything like myself, as I've said already, I literally want to build my net worth and I just want to build that and pass that on to my children. So that exit strategy for me is not going to work because I actually want the asset to pass on to my children as well so that they can benefit from that too. So my sort of game plan is literally putting a portion of the rental income into an investment fund or an investment plan like a stocks and shares ISA, and also putting a bit of that aside into my pension pot as well with funds like Vanguard. And so doing that from now, it's going to give me at least 20-25 years or more just to put some money aside, and then also I've got the returns on top as well. So hopefully that will build up to a substantial amount. Obviously at the minute things are taking a bit of a turn on the stock market, but overall by the end of the term, if I'm putting that money aside into these funds and into the pension, then hopefully I'll have a substantial amount to pay off each of the properties. So how am I planning this out? Right guys, so I'm not chucking a random amount in this fund each and every month and just hoping for the best. I've actually got a spreadsheet and it's literally got all of my properties on there. It's got other things as well. It helps me sort of manage my properties so I can keep track of when all of my rental agreements need to be renewed, stuff like like that, when the EPCs were done, when the electrical certs were done. And I've also got a tracker on there which tracks the amount that I want to be putting aside each month so that I can build that up to then pay off each and every mortgage. And I can also sort of put a copy of this, or put a link to that if you're interested in this as well, having a copy of this for yourself. Just put, I don't know, property plan in the comments below if you're interested in having a look at this. So say for example, and these are all example figures that I'm going to be spouting out here. So say for example, if I have a £200,000 interest only mortgage, and let's say that's over 25 years. So at the end of the 25 years, I'm still going to owe the £200,000, right? And if I put aside, for example, £500 each month over the next 25 years, and then assuming for roughly about a 7% return on that, I could then potentially grow this to maybe £250,000 or even more. And that's in the 25 years. So when I'm putting the money away, I'm not literally relying on investment gains solely. I'm hoping to build the amount from putting the money aside each month. So the investment gains are just going to be a bonus for me. So that's potentially without factoring in the market gains. So that way, even if returns are lower than expected, I am still covered, hopefully. And guys, yes, this is hypothetically speaking. I'm not an expert in investment funds and hedge funds, and I'm not a financial advisor. So yeah, this is just something that I've looked into from a little bit of research that I've done. However, if you do want to look at your finances and you do want to speak to a financial advisor, then you can use Unbiased. The link is in the description box below. And if you do click on the link, you'll get your first consultation for free. And Unbiased, literally, they are like a matchmaking service for your finances. So if you do need a financial advisor to speak to, they will match you up with the perfect financial advisor for you. And guys, I do make a small commission from everyone who signs up, so thank you. Yeah, so I'm not a financial advisor, guys. This is something that I have looked into and researched, and I thought I'm going to do this, and I thought this would work for myself personally. So please make sure you research this yourself and look into everything before you do it. So yeah, guys, I mean, let's be real, this strategy, it's not perfect. So let's look at the pros and cons. So pros, it could keep more of your cash flow open to you when you compare it to having something like a capital repayments mortgage. And therefore you've still got the flexibility of having those lower payments on the interest only, but you know that you're still covered and you're still putting that money aside for later on for your exit. Another pro, potentially you could be building up a great retirement or pot of money there alongside knowing that you're going to be paying off the mortgage completely. And another pro is, again, it's the flexibility. So if the market does do well, even though at the minute it's kind of filming this video, it's kind of tanking, but if the market does start to improve and things do get better and the market eventually does do really well, you could have the potential to pay off the mortgage even earlier. Again, it will still be way in the future, but potentially earlier than the mortgage term that you originally signed up to. So cons, guys, it's a risk. It's a massive risk. As with all investments, it comes with a risk. You're not guaranteed the returns. You're not guaranteed anything. Another con is that it requires a lot of discipline. So when you do see the money coming in, you've got to have that disciplined approach to actually that portion of your rental money each month aside. And again, the spreadsheet that I've got for all of the properties and sort of in how I manage my properties and things, I've actually calculated how much I need to save out of that rental income each month and put aside so that it covers it in 25 years, 30 years or whatever. I think I've got 25 years on mine because I'm hoping to have an earlier retirement. I've got more videos coming on this as well, guys, so stay tuned to the channel. But yeah, you've got to have that discipline so that you put the portion of money away and hold it back for yourself. I mean, you should be doing this anyway, obviously for tax purposes, but you need to have that discipline to put that portion of the rent aside for later on. It's delayed gratification. It's knowing that you are delaying the gratification of having that money now for later on. You can always automate it if you want as well and just automatically get it to come out of your business account or wherever you're paying the rents in, which again, that comes with more sort of tax benefits as well. But yeah, but again, guys, I'm not giving you any tax advice or anything. This is purely from my experience. But I think for me as a smaller landlord or a smaller investor, it could be a game changer changer because I'm already thinking about my exit and how I'm going to plan, and I'm not going to be left with that massive lump sum payment at the end of the mortgage term. I know I'm already thinking about how I'm going to be covering that from now. And I'm also not relying on that capital appreciation, which should happen with properties. I'm not relying on the property prices to increase over time. So then I can use some of the potential equity that could be built up into the property to pay or, to offset against the outstanding mortgage amount. And with the way things are going with government changes, tax changes, increases and things like that, hopefully that is going to help mitigate against all of that as well, because we just don't know what the government's going to do, in the future. If there are more and more tax hikes and taxes that could really affect us as investors moving forwards, at least I know from now I've got that money set aside to help against things. And I just feel like it's helping me take back control of my property investing finances, and I'm not solely relying on capital appreciation or the sale of a property to pay that off in the end. And honestly guys, what's the worst that could happen? It's just worst case scenario, I've got another pot of money to sit on for my retirement. So it's a win-win situation all over. So guys, if you do want to implement this strategy as well, a couple of things that you probably just want to think about is just things like knowing your numbers, know what's going to be outstanding or owed at the end of the mortgage term, so that you can then set a realistic monthly contribution to pay that off in the end. Choose the right investment fund for you. Be consistent, set up a direct debit if you need to, and just treat this like it is maybe a mortgage expense or another expense for you. And make sure that you are adjusting over time. If you feel that you want to put in more, adjust the amount for more. If you want it to be lower, make it lower. That is the beauty of this, is that you're not set to a set amount. It's whatever amount that you want to put aside. And like I said, what is the worst case scenario? Worst case scenario, you've got another pot of money set aside for your retirement. Best case, you've got a fully paid off property and you've got that financial cushion. So guys, what do you think? Could this strategy work for you? If you've got any other creative ways for your exit strategy, or how you're gonna deal with your interest only mortgage when it comes to the end of the term, pop them in the comments below. Let's have a chat about it. It'll be great. And if you're wondering how to even go about a refurb, watch this playlist next where I do just that. Thanks. Bye.